Do you think you need 20% down to buy a home? Think again. Let's break it down and see what you're really going to need in order to buy a home and what your options are. All right, so what is a down payment? The down payment is going to be a portion of the purchase price that you are going to pay up front. This is going to lower the amount of money that you're going to have to borrow from the lender to pay for the home. So this is separate from your closing costs. Now, I've made several videos about closing costs, so if you are wanting to know about that, you can look down below in the description. There'll be a link to a video that explains closing costs. So just make sure that you know your down payment and your closing costs are completely separate. They are two different things. And then your down payment is going to actually determine your monthly payments, your interest rates, your loan approval, that kind of stuff. So it's really based on what kind of loan that you are going to get. So we'll kind of break that down and go over each loan and how much of a down payment you're going to be looking at if you are to use that type of loan. All right, so the first one is going to be conventional. So on a conventional loan, you can get it down to 3 to 5% if you really wanted to. But if you want to avoid the private mortgage insurance, then you're going to have to put that 20% down whenever it comes to a conventional loan. So keep that in mind. If you're getting a conventional, yes, 3 to 5% might save you some money out of pocket. But in the long run, if you go ahead and put that 20% down and you don't have the PMI or private mortgage insurance, then it'll save you some money in the long run. So it really just depends on what you prefer whenever it comes to saving money up front, or if you'd rather save that money on the back end. And the second loan type is going to be FHA. This is going to be 3.5% down. You will still have that PMI that you're going to have to deal with until you get to 80% of the loan amount. Keep that in mind. This is a good loan for first-time home buyers or anybody that has maybe a lower credit score. Then FHA is going to be a good option for you. The next one is going to be VA. Obviously, this is for your active duty and veterans. So there will be the big fat goose egg, 0 down payment. Just make sure you know, even with VA, you're still going to have closing costs. So yes, you might not have a down payment, but you are still going to have attorney fees, prorated taxes, stuff like that you're going to have to pay for if you can't get the seller to take care of that whenever you're negotiating the offer. Also on the VA, there is no PMI with that, so you don't have to worry about the private mortgage insurance with a VA loan. And then the last one we're going to talk about is going to be USDA, which is also 0 down, but there is a but with this one. There are only specific areas that qualify for a USDA loan. So if this is something that you want to look at doing, then you need to make sure that you are in an eligible area to do a USDA loan. And there is actually a website. You can Google USDA eligibility, and then it will come up with a map, and you can type in the address or the area that you're looking at, and it will tell you whether it's eligible for USDA or not. Now, if you're working with me, I'll take care of this for you. You let me know, hey, I want to use a USDA loan, then I'll make sure all the homes that I'm sending you are in those eligible areas. That way, you know, if you see something you love, then you can purchase it with that USDA loan. Now, with that USDA loan, there are going to be some income restrictions and criteria that you have to meet. If you make too much money, you're not going to be able to use a USDA loan. So just keep that in mind whenever you're trying to decide what loan you want to use. There are stipulations that you have to meet in order to use that USDA loan. So let's just talk about what the average down payment is. And nationally, it's going to be 6 to 7%. Now, it's typically less for first-time home buyers because maybe you don't have a lot of money lying around that you can put into the home, or whatever the case may be. It's just statistically first-time home buyers put down less of a down payment than, let's say, repeat buyers or maybe someone who's been saving up to actually buy a home. And again, hey, if you're going to buy a home, it's my suggestion that you do save up that money, have a little extra, have a little more than what you're going to actually need. That way, if any surprises come up throughout the transaction, then you're prepared and you are able to continue with purchasing that home. How does your down payment affect your monthly payment? The lower the down payment, the higher the amount that you're going to have to finance, which means your monthly payments are going to be more than if you were to put down more up front. Pretty simple math, but a lot of people don't understand this. So I just want to make sure that you guys understand everything there is to know about the down payment and what it actually goes towards and what it actually does for you. So obviously, the higher your down payment, the lower your monthly payment is going to be. And let's be honest, honest, you're going to have equity in the home quicker the more you put down. So just keep that in mind. And it's also going to help you on your interest rate. I know that stinks, but the more you put down, the better interest rate you're going to get. So just know that if you want a better interest rate, you can put down more money and then you would get that better interest rate. There are also points which we'll get into that in another video because that's a whole nother topic on its own. All right, so there are some other costs that you're gonna need to budget for. I'm just gonna throw them in this video just so you will have an idea of what those are gonna be. The first thing is gonna be the closing cost. I typically tell my clients 2 to 5%, depending on the purchase price and all that kind of stuff, what they're gonna be looking at as far as closing costs are concerned. Now, right now, the way the market is, I've been able to kind of negotiate this with sellers and get some help for the buyers on their closing costs. The market that we're in right now is allowing that to happen, but if we do have a fluctuation in the market or it becomes a seller's market or whatever the case may be, then that may change. You're also going to need to make sure that you have the money for the appraisal and the home inspection. Now, home inspection, depending on the size of the home, will be anywhere from $350 to $500. Also will depend on all the types of inspections that you want to have done on the home. So if you get just a basic home inspection, let's just say it's 2,200 square foot house, you're probably going to be looking at like $350. But if you go and you start adding sewer scoping and radon and mold testing and all that kind of stuff, then it's just going to kind of build up and you could be at $600-700 before you know it. So just know exactly what inspections that you're going to want to have. And then if you're going to want extra inspections, then make sure that you have a little extra money for that set aside. Now, the appraisal is going to cost you $550. So that does come out of pocket when they order the appraisal. So just be ready for that whenever the lender calls you up and says, hey, we're ready to order that appraisal. Are you ready to pay for it? And you're like, oh, appraisal, how much is that? Well, now you know, $550 and you'll get your appraisal done. And then the last thing I'm going to say is going to be the moving expenses and maybe some initial maintenance stuff that you're going to have to do to the home. If you're buying a home that has been lived in before, there's probably going to be some small cosmetic stuff that you're going to want to take care of, or maybe you have some personal preference things that you want to change in the home. So make sure you have some money set aside for the moving expenses and those little odd and ends that you're going to want to do whenever you get moved into the home. Now, there are a couple of myths that I hear all the time when it comes to down payments. And the first one is I have to have 20% down to buy a home. And that's just not the case. Okay. There are multiple options that you have where you do not have to put the 20% down. Is it best to put the 20% down in the long run? I'd say yes. But if you don't have it, you don't have it. And a lot of times people that don't have it still need to get into a home. So there are other options where you don't have to have that 20% down. And then another one that I hear is that you can't get help with your down payment. Now, I will say, depending on the lender, you have to okay it with your lender and make sure that they are good with it. But there are down payment assistance programs which your lender will let you know about if you qualify for them, or you can get gift funds from a family member. Now, with the gift funds, you have to know that it does have to be approved by the lender, and that person that's giving the gift funds is probably going to have to show them proof of where that money came from and where they're getting it. So make sure that they know that. If you got a family member, let's say your mom or your dad or a brother or whoever wants to lend you some money to help you get into a home, just know the lender might require them to show documentation where that money came from. Now, a little pro tip, you might have some money set aside and that's great. And you want to get a home, you need to get a home, that's fine. We're going to do that for you. We're going to make sure that we get you the best deal possible, that you spend the least amount of money out of pocket as possible to get into the home that you really love. But do not drain all of your savings, okay? You do not want to be house poor. You don't want to spend all of your money and not have anything set aside if you have any emergencies, or let's just say you get in the house and something happens. You've got to have money just in case of an emergency. So make sure you have a little emergency fund set aside, and then we can use the other money to get you into the home. And you can also use a mortgage calculator. There are plenty of them online, and you can use these to kind of mess around with what your down payment would be, how much the home would be, and all that kind of stuff to give you a little bit of an idea before you talk to a lender. But talking to a lender and actually getting the pre-approval done is going to be the best way for you to know exactly what you can afford when it comes to buying a home. So maybe you're not sure what you can afford or how much you need to put down. Give me a call at 478-888-7808. We would love to have a conversation with you, get you in touch with a lender who can help you out, no obligation, just see what your options are and kind of give you an idea of what you'd be looking at as far as a down payment and closing costs whenever it comes to a home that you absolutely love.